Hey everybody, welcome to Mortgage Today for Friday, March 22nd, 2024. And oh, what a day it was. UMBS were up 14 basis points this morning. Bonds were only modestly stronger and mostly sideways in most of the overnight session. Early U.S. trading kicked things into slightly higher gear starting right at 8 a.m. At that point, 10-year yields dropped from a flat range in just over 4.24 down under 4.21. Right away early in the morning, it was down 6.3 basis points on the day at 4.202. When we were writing our early morning commentary, MBS are underperforming the long end of the yield curve, but are also in noticeably better shape with 5.5 coupons up a quarter point. We don't have any solid color to explain the mini surge this morning, but it does coincide with a clear uptick in volume at 8 a.m. Some analysts have suggested it's simple as elevated activity amongst leveraged fast money traders heading into the 820 CME Open. That's as good an explanation as any. Stock markets barreled ahead this week, putting the S&P 500 on track for the best run so far of 2024. As a raft of central bank meetings left traders convinced that interest rate cuts are coming soon. Existing home sales rose 9.5% in February to a seasonally adjusted annual rate of 4.38 million. This was down 3.3% compared to a year ago. The median home price rose 5.7% year over year to $384,500. First-time home buyers accounted for only 26% of sales, which is down from their historical level of 40% or so. It is clear the first-time homebuyers priced out of the market. Investors in second homes increased their share to 21%. For-sale inventory picking up according to Redfin. During the 4 weeks ended March 17th, the number of homes for sale increased 5%, the biggest of a year-over-year increase since October of 2022. Redfin's home buyer demand index was up 9%. While it's not technically a 9-day weekend for the bond market, it might as well be. It's not the upcoming week is in. It's not that the upcoming week is inconsequential in terms of economic data or events, just that the data isn't on high enough tier to change the big picture. Perhaps if rates were closer to boundary of their current range, we could entertain next week's reports, helping to spark a lead-off toward higher rates or lower rates. Perhaps if rates were closer to the boundary of their current range, we could entertain next week's reports, helping to spark a leadoff towards higher or lower rates. But from our current perch, the most likely outcome is simply be revisiting the recent range boundaries. The fact that next Thursday is an early close before a full closure on Friday only adds to the case for traders tuning out until April 1st. As for today specifically, it was a winner in terms of bond market gains, but not for any particular reason. But UMBS were up 22 basis points, which we will take, ending up at 100.98. So 100.98, at least it gets us above that 50-day moving average, which could be meaningful as long as we can stay above it. Maybe we can make a run towards those other Fibonacci levels. Next week, we do have some stuff going on. Not a ton of data, but there is some activity that's worth noting. On Monday, we do get a Fed speech from Cook and Bostic. These have been moving the market quite a bit lately because everybody's looking for news. We get durable goods on Tuesday, which could move the market. We have a couple of auctions there, and then Fed Waller on Wednesday. As always, jobs on Thursday. We also get a GDP deflator. Could give some indications and stuff there. And then, of course, we do have the Fed chair speaking on Friday, which is a closed day, which would roll over into Monday's activity as well as the PCE. So that is some pretty big information there on Friday for a day when the market is closed. Those are all things we don't have control over. What we do have control over is our minds and what we can learn. So check out some of our check out some of our common sources and influences over the weekend, especially our sponsor at wellthatmakesense.com. Bunch of great stuff up there. Have a great weekend, everybody.